On the program today, Egypt to issue first sovereign sukuk worth over $2 billion. And national payments in Zimbabwe hit $1.24 trillion for the first quarter of 2021. Gold production declines to 4 million ounces in 2020 in Ghana. Thank you so much for joining us on Business Incorporated today. I'm Ini John Mekwa. First, let's look at the market numbers. We start off on the African continent. Major markets we track were doing good at intraday. At about noon, the Egypt's EGX 30 was in the positive territory, up 0.68%. At 10,031.87 points. Nigeria's NGX followed, also up 0.08% at 38,912 points. South Africa's JSE was on the flip side, down 0.31% at 67,434.58. Kenya closed the market on a high note yesterday, adding almost 1% at 171.84 points. And in the Middle East, most of the positive sentiment from the African continent spills to the Middle East. Abu Dhabi inched up 0.61% at intraday, and far behind came Saudi Arabia. It was also up 0.28%. Qatar came close with a 0.23% increase on its all-share index. Only the Dubai index was down, shedding 0.13%. Well, we'll move over to Europe now. European stocks were muted this morning as investors prepare for the next reading of U.S. inflation, which is due tomorrow. Chelsea joins us from Frankfurt to give us more from the region. Hello, Chelsea. Good afternoon.
Good afternoon.
So European and UK leaders are meeting in London today to discuss the Brexit arrangement as tensions continue to escalate over its implementation. What can we expect from that meeting?
We've already heard some statements from the meeting. The UK's Brexit Minister, David Frost, said that there has not been a breakthrough, but there also hasn't been a breakdown. So it seems like very little was achieved during today's meeting. So these big outstanding questions still remain. The biggest problem right now between the EU and the UK is the question of Northern Ireland. Northern Ireland is a part of Great Britain, but it also borders the EU because of its position next to Ireland. So how to treat goods that are going from the UK into Northern Ireland has been a big topic of contention throughout the Brexit process. And the EU is right now very unhappy with the UK because it's not following through on some of the promises it had made to carry out customs checks as those goods enter into Northern Ireland. And this is a bit of a complicated and technical issue, but it has major ramifications for the relationship between the EU and the UK. The EU in March already opened legal action against the UK, and this is something that could lead to tariffs on UK goods, potentially court cases or big fines that could be levied on the UK. So there certainly is a lot of pressure on these two sides to come to some sort of an agreement, even though that still looks pretty far off right now.
Yeah, but we do hope they come to an agreement very soon. Well, German exports rose for the 12th consecutive month in April, according to new data made available to us. What drove that growth?
So we did see a very minor increase in German exports in April, up about 0.3%, but it was the 12th consecutive month of growth. And what we're seeing is sort of the trend that's been driving exports in recent months is the growth of the Chinese market and the U.S. market. So those are really the strongest areas for German exporters right now. The Chinese market, particularly for things like the German auto sector, sort of high-tech machinery, things like that. The U.S. economy is also doing quite well right now, in part because of the stimulus efforts from the Biden administration. All of that is really feeding back into more demand for some of these German products. At the same time, though, this growth is quite marginal. 0.3% is not that high. And economists say that is likely to do with some of the shortages we're seeing across a number of goods. Things like semiconductors, which we've spoken about, have made it very difficult for the German automakers to keep up production. As well, things like timber, a shortage of timber has made it difficult to ship things because that's usually used as a packing material. So all of this is for now really constraining the export side of the German economy.
And the EU Parliament has approved vaccine passport to ease travel this summer. How will this passport work, and how are investors reacting to this?
Well, this passport has been long anticipated, so we haven't seen much of a reaction on the market, but it is expected to be, in general, quite good for particularly the retail, tourism side of the European economy. These passes, it's basically supposed to work like it's been called the vaccine passport, but it essentially would be an app on your phone, potentially, that would show whether you've been vaccinated, or as well if you've had a negative coronavirus test or have recovered from the virus. And using this, you would be able to travel within the EU and show it at, for example, if you're entering a country and going through passport control, you could show this QR code on your phone, and that would make it much easier for you to travel throughout the European Union. It is expected to hit the market on July 1st. That's when most countries have agreed to bring it to consumers across their countries. So all of this is really raising hopes that we will see people return to traveling throughout the summer.
All right. Thank you so much, Chelsea. We'll be waiting for July for that passport. I'll enjoy the rest of your day. We move over now to London, and despite the fanfare over its rapid vaccination program and the unlocking of coronavirus restrictions come on 21st of June, which is just about 11 days away, the Delta variant of COVID-19 seems to be dimming the chances of the Freedom Day. Well, Juliana, my colleague in London, joins us now to bring us up to date with what's going on with that and other stories. Hello, Juliana. Good afternoon.
Good afternoon, Annie.
Yeah, so it looks like there might be a delay in the much-anticipated Freedom Day. How are investors reacting to this at this time?
Well, the FTSE is firmly in the red in intraday. Not really much to do with Freedom Day, more to do with inflation fears. The outgoing chief economist of the Bank of England, Andy Holden, has been doing a round of interviews, and he's mentioned the housing market and the fact that it's on fire. And he's also preluded to some high rising of inflation over the next couple of months. That's kind of put some fear into investors. But, you know, with regards to June the 21st, it's just we'll have to wait and see. We've heard comments from Prime Minister Boris Johnson. He's saying the same rhetoric that he's been saying throughout the pandemic, which is it's data before dates. As you said, June the 21st, pretty much around the corner. We're expecting an official update by the British government on Monday, the 14th of June. I'm not a betting lady, but if I was, I think, you know, most people in the UK are not expecting all restrictions to be lifted on the 21st of June. Everybody's talking about the Indian variant, which has now been called the Delta variant, to not cause any offence. We are seeing a surge in cases among pockets of different parts of the country. We know Scotland and Wales have already kind of reined back the freedom of its citizens. So we just have to wait and see. But yes, I don't think anybody really is expecting the government to stick to its plans. Having a look at the numbers, the all-share is down at intraday by 0.57%. The FTSE 100 is down also by 0.54%, and the FTSE 250 is down by 0.57%. In the currencies market, the British pound is up against the US dollar by 0.22%, up against the euro by 0.8%, and up against the Japanese yen by 0.21%.
Well, certainly not good news for Upper Cross, which has already made a pre-tax loss of £300 million.
Yeah, SSP, they're the owner of Upper Crust. Upper Crust is a kind of London-based, pretty high-flying diner outlet. It's basically for commuters. So anybody who's familiar with the brand would have seen it in some of the big stations like Waterloo, King's Cross, and Victoria. Unfortunately, of course, people have not been travelling. So their revenues and their sales have plummeted. I believe in the 6 months to the period we're talking about in 2020, they lost £10.2 million. In the same period this year, they lost over £188 million. That's a massive fall for them. Not sure whether or not they're going to survive. That's Upper Crust. But SSP, the owner of Upper Crust, they've also been going through it. I believe they've had to shut down 2,500 of their dining outlets. They furloughed about 22,000 staff, and they've also made hundreds and hundreds of redundancies. Despite this kind of downcast forecast, they're still upbeat. They do believe that once people are back in the offices again and people are able to start travelling, that they will be able to bounce back. We'll just have to wait and see.
Yeah, wait and see again. And sales of halogen light bulbs are to be banned in the UK from September, with fluorescent lights to follow. The government is very serious about meeting up with the climate change plan.
Absolutely, the government is. And I believe already about 2/3 of lights in the UK are energy efficient. That's the kind of bulbs that Britain have been selling in the front of their stores. So the government have already been phasing out these kind of really fluorescent energy zapping light bulbs. I believe only about 15% are sold on the market currently. That is going to be banned. So it's going to be banned from using these halogen lights from September. And I believe LED lights are also going to have the complete axe sometime next year. This is all part, as you said, of Britain putting its foot first and taking climate change seriously, especially ahead of COP26 in Glasgow in November. So yes, the government are trying to do this. And I do believe it is actually part of a wider package of trying to look at homes and some of our electrical features and trying to make them more energy friendly to save homeowners £75 a year. So this is just one in many steps the government are involved in right now.
All right. Thank you so much, Juliana. Enjoy the rest of your day. Well, we move over now from London to Asia, where shares in major Asia-Pacific markets were mixed today. Investors reacted to the release of Chinese inflation data. Mainland Chinese stocks nudged higher on the day as the Shanghai Composite climbed 0.32% to 3,591.40, while Shenzhen Component was marginally higher at 14,718.40. Hong Kong's Hang Seng Index dipped about 0.1% as of its final hour of trading. In Japan, the Nikkei 225 shed 0.35% to close at 28,860.80, while the Topix Index dipped 0.28% to end the trading day at 1,957.14. South Korea's Kospi also declined 0.97% to close at 3,216.18. The S&P ASX 200 in Australia fell 0.31% on the day to 7,270.20. MSCI's broadest index of Asia-Pacific shares outside of Japan also slipped 0.29%. Moving over to the United States now, stocks futures were flat in early morning trading on Wednesday after Wall Street appeared range-bound near its record levels. Futures on the Dow Jones Industrial Average were just about 10 points lower. S&P 500 futures and Nasdaq 100 futures also hovered in marginally positive territory. The S&P 500 and the blue chip Dow both closed near the flat line on Tuesday. The broad equity benchmark is now just 0.3% below its record high of 4,238.04 reached on the 7th of May. The Consumer Price Index for May is set to be released tomorrow. Economists are expecting the CPI to rise 4.7% from a year earlier. We'll take a break now. When we come back, we'll give you more stories on Business Incorporated. Stay with us. welcome back. You're still watching Business Incorporated on Channels Television. Well, yesterday, Statistics South Africa released the GDP figures for the first quarter of the year. The economy grew by 1.1%, translating into annualized growth rate of 4.6%. But the government has noted that this does not mean that the country is out of the woods yet. Well, we have Makwe Masalela, Chief Investment Officer, and Makwe Fund Managers joining us from South Africa to discuss South African economy at this time. Good afternoon, Mr. Masalela. Good afternoon. Thank you for joining us today.
Pleasure. Good afternoon to you and to the viewers.
Yeah. So the first quarter growth was lower than revised 1.4% or an annualized 5.8%. But it was expected, especially, was it expected, especially with the threats of the new wave of COVID-19 and the issues with the vaccination and all that?
It caught us by surprise, to be honest, and to think that, no one expected. We were looking at 3.2, and more importantly, it was better than what our Reserve Bank also expected, and also better than what our National Treasury Department of Finance also expected. So I think it caught everyone by surprise. But hey, it's a nice surprise. Everyone can welcome such good news.
Exactly. So finance, mining, and trade sectors were the major contributors of the growth. What factors drove these sectors?
It was expected, especially when you look at the likes of mining, that is going to continue to be a star performer. Remember, South Africa, we make most of our foreign earnings from selling our minerals to the likes of China. And we've seen, given the company results that have been coming through from our mining companies, that they've been printing money, they've been doing well because of better commodity prices, because of the demand that has been picking up. So as a result, it makes sense that they will continue to increase production. So that was expected in a way. And yes, South Africa, as we know, that finance, trade, and stuff like that, they continue to be the biggest component of our economy. And as we know that our economy depends almost or is driven 62% by consumer demand. So any pickup in consumer demand, then that should also help our GDP going forward. But I think the biggest concern, truth be told, as much as these numbers are good, is the fact that if you look at our gross fixed capital formation, that's not impressive at all, because now it decreased by almost 2.6%.
So the Statistician General has warned that the country is not out of the woods yet. And from all that you have seen and all your calculations, what's your outlook for the next quarter?
We think we'll still continue to grow, but not at this kind of numbers, anything around 2.6%, and all because we think that demand is still out there. There is relaxation of some restrictions are there, helping to pick up, and we hope even the likes of, our tourism will start to pick up, because it also contributes a significant portion to our economy. So with people getting vaccinated, then at least people won't be scared to come to the country, just like locals won't be scared to start traveling around other provinces.
So do you see any steps that the government can put in place to move the country, faster out of the woods?
Other than making sure that they improve their rollout when it comes to vaccination, because our track record so far has been very, very poor, we have to make structural reforms. As we're talking to you now, Eskom, who supplies us electricity, he said we're going to just go to stage 5 load shedding, or stage 4 as from today. That means you will have no electricity for almost 4 hours. That's ridiculous. And thereafter, you'll go back to stage 2. That means for almost 2 hours, you won't have electricity. What I'm saying, we still have to deal with this elephant in the room, which is Eskom. And other than that, we have other structural reforms that we have to implement to try to make sure that our data is more cheaper, by making sure that the government go out and auction that spectrum. So stuff like that needs to be improved. And also, when it comes to efficiency from the government side, we don't want things for long to be signed off. So they also have to up their game. So those things will definitely help going forward.
Okay. All right. Thank you so much, Mr. Masalela, for bringing us up to date with the economy, what's going on in the economy in South Africa. Enjoy the rest of your day. Well, moving on now. Egypt might issue the first sovereign sukuk in its history at the beginning of the new fiscal year with a value of up to $2 billion. Egypt's government debt instruments attracted foreign investment of as much as $29 billion up to the end of May. This comes a day after Egypt issued a one-year dollar treasury bills at a value of $540.6 million with an average return of 3.088%. And in Zimbabwe, the Reserve Bank of Zimbabwe says the value of transactions processed through the national payment systems hit the $1.2 trillion mark during the first quarter of this year, rising by 9% from $1.13 trillion during the previous quarter, which ended in December 2020. In its national payments report for the period, the Reserve Bank reported that real-time gross settlement systems accounted for the bulk of transactions during the period. In its report, the RBZ said volumes decreased by 29% to 338.5 million during the review period from 473.3 million transactions during the same period in 2020. The report noted that internet-based payments accounted for 17.51%, while mobile-based payments accounted for 9.40% of the total point-of-sale system, accounted for 5.86% of transactions, while only 1.74% of transactions were in cash, with payments through automated teller machines representing 0.64% of total payments. Figures contained in the 2020 annual report of the Ghana Chamber indicates that the total volume of gold produced in the country declined from 4.57 million ounces in 2019 to 4.023 million ounces in 2020. According to the president of the Chamber of Mines, the low production was because of a combination of domestic issues and COVID-19 related factors. Ghana continued to hold on to its position as the largest producer of gold in Africa and the sixth in the world, even though the country recorded a decline in output by 12.1%. Ghana's closest rival and long-term leading producer, South Africa, also recorded a 13.7% decline in production at 91 tons and remained in second place on the continent and 10th globally. The 12.1% decline in production in Ghana is the highest year-on-year decline since 2004. And more from the metal markets now. Gold prices inch higher today, helped by a fall in U.S. bond yields, with investors holding back from making large bets ahead of U.S. inflation data and the European Central Bank policy meeting this week. Looking at the fundamentals now, spot gold was up 0.1% at $1,893.78 per ounce, while U.S. gold futures edged 0.1% higher to $1,896.60 per ounce. The benchmark 10-year Treasury yields fell to their lowest in more than a month, reducing the opportunity cost of holding non-interest-bearing gold. Silver was steady at 27.63 per ounce. Palladium gained 0.2% to 2,812.30, while platinum edged 0.1% lower to 1,160.81. And still in the markets now, but oil prices rose for a second day today on signs of strong fuel demand in Europe, while the prospect of a near-term return of Iranian oil supply faded, as the U.S. Secretary of State said that sanctions against Tehran were likely to be lifted. Brent crude futures were up 15 cents to $72.37 a barrel, and earlier rose to $72.58 a barrel, the highest since May the 20th, 2019. U.S. West Texas Intermediate crude futures jumped 20 cents to $70.25 a barrel after rising to as high as $70.42 a barrel, the most since October 2018. The market is being boosted by a solid outlook for fuel demand growth, as well as travel curbs, which are lifted in Europe with more people getting vaccinated. In another positive sign, industry data showed U.S. crude oil inventories fell last week, in line with analyst expectations. And that's it for the program today. Thank you so much for watching Business Incorporated. I'm Ini John Mekwa.